Hello everyone, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS podcast. Today I'm joined by Amanda Gascoigne from Amanda Gascoigne Consulting from beautiful Port Stephens, New South Wales. How are you, Amanda?
I'm great, thanks Peter. How are you?
Very good, thank you. Well, a few things are happening in the accounting market this week, so I thought we could have a conversation about them.
Yeah, sure.
I sat down last night and did an analysis on the benchmarking.com.au's latest report on the Australian accounting industry, and it indicates that the average firm is generating income of $2,028,000. 77.7% of the fees are generated for clients paying less than $3,000. So to my mind, that puts most of that into the tax return, tax advice sort of area.
Compliance.
And
compliance.
And the total revenue per client was only $2,362. It's interesting to note that in 2017, when I also did a detailed analysis on these figures, the average firm had an income of 1.75 million, but the revenue per client was shown as $4,784. That's a very significant drop back to $2,362. You got any thoughts as to what might be causing this?
Look, I definitely agree. The numbers are going not the way we want them to be. They're going backwards, and I've been seeing it for a long time. I've got another stat that I've got here, from the Business Fitness is Good, Bad and the Ugly. I often look at their average fee per client to talk to the clients that I'm talking to, so that is small and solo accounting practice owners, and the numbers are going down, and there's a few reasons for that. We are seeing an unprecedented amount of entrance into the market of offering accounting and tax services. There appears to be a bit of a race to the bottom, if you like, that the cost of some of this stuff is being advertised at extraordinarily cheap rates. So what I say to the people that I work with, that we know we can't compete on those rates, but there's a tendency, because if they don't, they're going to lose some work. But there's other strategies around that, but there's a lot of, a push to go down to that. But what I say to those people is, other people can charge that. We don't know what their models are. We don't know what their quality is. And so if we know that we can't offer that service at that price, don't bother. And let's look at resetting what we do in our practice. But it definitely is going down. And I think, so it's the competition from all these people that are bringing the prices down. We've got more and more accountants setting up shop. The barriers to entry to getting to be an accountant is less. So whilst a lot of those people start out, they can potentially undercut because they're working from home, but in quick succession, because they're good at what they do, they need staff, they need offices, and therefore if they continue charging that rate, they're not making any money. They would have been better off staying as an employee. So we've got that issue. And then we've got the rise of the cloud accounting, which is supposedly helping do accounting easier. But what I say about that is also, yes, it helps to some extent, but remembering the cloud accounting is only replacing a very small amount of the whole accounting process.
That's right.
It is replacing the bookkeeping process. Yes, we can do things quicker, but if you think about all of the extra things we have to do for compliance, all the changes in legislation, which the software doesn't do that. It's garbage in, garbage out, and we know the quality of some of that stuff. We can set up rules, but if they're not set up right, so we do need the eager, eye of someone else looking over it. We need to be interpreting the legislation. We need to be looking at the new ATO regulations in relation to, Section 109, in relation to allocation of profits. Software doesn't do this, so we're actually being required to do more and for less money. So it doesn't make sense.
That's right.
I think we have to be thinking, what else can we do? Instead of joining it, let's see what we can do to basically, to do something different.
You're now getting onto the area I'm on the bandwagon about. But,
yeah.
Yes, I think there's a lot of extra work accountants could do, and I would urge our viewers to have a good think about this. I know you're venturing into the dark. At ESS BIZTOOLS, we've uploaded a revamped form today, which is a new opportunities calculator, which enables you to look at what you might be able to do. Because the problem is, when I analyze these figures from benchmarking.com, somewhere around 77.7% of clients for the all firms average are paying less than $3,000. For the smaller firms, which was an average of $428,000 income, 81.4% of their clients are paying less than $3,000. The slightly larger firm on an income of $4.2 million had 73.2%. So it's still around over 74% of all those firms are earning. That 74% represents less than $3,000 in fees. To my mind, it is tax return market. And if the trend there is to have lower and lower fees, I really think accountants have got to look at what they're doing with the balance of around 27% of their clientele.
Yeah.
What can they do with them? What can they do with the clients in the category of $3,000 to $5,000 in fees?
Yeah.
There's a fair number of them, and also then in the $5,000 to $10,000.
Yeah. So, Peter, if we think about this, what is a $3,000 client, right? So it probably looks like in a small or solo accounting practice, when they're working with SME, family type businesses, it probably looks like a set of financial statements and a tax return and maybe 4 BASs. That's what's in that 3,000. Or it might be, if the client does their own BASs, it might be the set of financials and tax return and maybe tax planning. But that is only such a small amount of stuff that we could offer the clients. So that's our starting point. So what can we add on after that? Because really, that's what we want to do. And remembering, even for $3,000, if we're doing financials and 4 BASs, what else are we doing for that client during the year? We're there as their SOS to pick us up, pick up the phone and, what's happening here? We need help with this. So we're there to answer phone calls, answer emails. We're there to help explain things like the JobKeeper, grant applications, all of that. That's a lot of stuff. When we think about it, it doesn't matter what other people are charging. And we know the stats are saying that they're all charging similar. But that is an awful lot of things that we're doing for a client, and especially I know in that small and solo space, we're really good at giving information. We're really good at caring. There's a factor that actually should also come at a cost. We're not just commoditizing what we're doing. So I think there's a lot of stuff we could be adding onto that. And if you think $3,000 and then you might want to get that to a $5,000 client, how many of those do you actually need? So if you wanted to have a practice that you're turning over $400,000 or $500,000, let's say $500,000 in turnover, let's say you've got 50 grand's worth of individual returns, and then you're charging, let's say, $4,000. That's nearly 115 clients or client groups. Now, that's actually quite easy to manage. 115 client groups. We don't mind them ringing us, sending the email, but what I'm seeing is we've got people with 350 client groups, and is it any wonder accountants have got no time to actually do that, the other advisory? They've got no time to build their practice and really grow it into a sustainable offering that it can be.
Yeah, okay. Well, let me discuss with you and obviously to our viewers some suggestions as to where they might think about offering additional services. I suspect every one of these smaller firms and medium-sized firms have got people who are running tradie type businesses.
Absolutely, a great proportion.
One of the most popular packages within ESS BIZTOOLS is our tradie charge out rate calculator. I have one client who one subscriber, who told our marketing reviewer that he has 110 of his clients that are on the annual tradie charge out rate calculator, and they also factored in a monthly set of financial accounts and a monthly or quarterly, it does vary, business review meeting to look at it.
Great. Yeah.
He is averaging $7,000 per client in extra fees over and above what he was charging for the compliance, the annual accounts and tax return. Multiply that by 110, that's a significant amount of money.
It's a pretty easy service to offer. Now, I'm going to tell you what, if we were sitting in a room full of accountants and telling this is possible for them, I'll tell you what they're going to tell us. They're going to say, those tradie people will not pay us $7,000 for that. No way. They're not going to do that. They're whinging about paying us $2,000 for compliance. But we both know that they will pay for that. I've just come off the back. I mean, I don't do a lot of compliance work anymore since selling my practice, but I still go back to the practice and I offer tax planning. So I teach accountants how to do tax planning in my course, but I also still do it. And one of the things that I actually discussed with the 3 people that I met with last week, a plumber, electrician, and a painter, we talked charge out rates. We talked what was happening in the economy, where they wanted to know whether if they make a pay rise, how that's going to, what do we need to do with charge out rates and that for next year. They want to pay for that. So for them, yes, I did tax planning, but more to the point, they were interested in this stuff and they said to me, we love tax planning time of the year. We love looking at these charge out rates. We love looking at this. It gives us peace of mind going into the next year. Now, if I was still in practice, I would be doing exactly what you're suggesting and sitting down quarterly with those people, and they will pay me. And how much fun is it to have those conversations? And we're actually adding value.
Yes, and the tradie market talk. They talk in the pub, they talk on the house jobs or the building jobs that they're working on. They say, oh, our accountant got us in. Because a lot of tradies feel that they're the forgotten group in lots of accountancy firms. But you could also extend the same service to professionals.
Consultants,
a lot of professionals have got no idea.
No, consultants an hourly rate. Yep. And you could actually, for the accountants and the bookkeepers that might be listening, do the analysis for yourself. And I think that's another thing we could do ourselves.
That's what Andrew Geddes always suggests to me. Tell them to do it with themselves first.
You get a much better understanding, but I think clients will pay for it. And, there's no need reinventing the wheel when there's products like your charge rate calculator, which is all there, it's consistent. And I think a lot of accounting practices, that all they want to know, because they might be thinking $3,300 for their average fee, they want to grow more. But when they grow more, they need more staff, they need to pay those people, and we know that's an issue. Perhaps we can talk about the lack of staff and what people are paying to retain staff and get staff. But you actually don't need a lot of staff. If you've got your 115, lots of tax returns and financial statements, and then you do this stuff quarterly, you probably don't need the level of staffing that you've got to churn through that compliance work. So this is something that an individual could quite easily do on their own with minimal assistance.
Yes, I agree. But Amanda, also, I think accountants have got to have a good close look at what's happening in their marketplace. Where you have, I'll just look at these stats I've prepared. For small firms, according to benchmarking.com, 59.6% for fees of less than $500.
Yeah.
Now, quite frankly, and rather brutally in this conversation, I think accountants should be letting that go to people who just want to do tax returns. Sell off a package of clients to a mate down the road. And so you can get into doing what you have been to university and have undertaken the PY or whatever it's now called, or the CPA's membership requirements. You've done that. And if you're going to invest in products like mine and yours to help you, and this is a confidence thing. Amanda, you weren't born with all this knowledge, and I definitely wasn't.
No.
We've all
had a lot of trial and error, and we didn't have a lot of this stuff. That's why you and I have developed tools and developed systems to help, so people don't have to reinvent the wheel. So we've actually got stuff that's tried and tested that can be plugged and played initially, and then once you get the confidence, you can have your own little flavor on it, or you can add another spreadsheet or another sheet to the spreadsheet, maybe add some graphs. You can do what you want to it, but the thing is getting started. And that's when I speak to so many small and solo accounting practice owners. They want to grow, they want to do things differently, they want to get off that hamster wheel, but they don't know where to start, and they don't have time to actually create this stuff themselves.
That's right. So we've uploaded some new material to our website today, which looks at things like Section 708. I had a business advisory firm approach me 3 weeks ago to see whether I would help one of their clients do due diligence to raise some capital. About 70 to 100,000 was the figure mentioned, under Section 708 of the Corporations Act. I said, yes, okay. Now, I've had a good look at it, had a meeting with the client, and they also want to raise more than what they're going to get under Section 708. So we're going to do 708, we're doing it now, and then we're going to go into crowdsource funding equity raising. Now, my quotation to them was $9,700 for the 708 part of it. Some of that is for we needed in the crowdsource funding equity raising. That works there. People can do it. Now, okay, I've done a few of those, but we've got procedures in our system showing you how to do it. And if anyone that's using my services, and I know you offer this to people also, Amanda, just get on the phone and give us a ring. And I'm quite happy. And I've done joint deals with clients. I'm proposing one at present, whereby I think I'll end up doing 70 to 80% of the job initially, but the other practitioner is going to be participating in the conversations, learning. So she'll take over. I don't want to be doing this forever.
No, and that's the thing. I think part of what we do is empowering others to do stuff, and do things that that they're very capable of. And sometimes when you go out into practice of your own, you either haven't had the mentors before that have actually done it these new ways and looking at things differently, but also it's like that you tend to lose a bit of confidence because it's been such a long time. But it's like, a lot of this stuff, it comes back to people so quickly. But if you've got that guidance and support, like, that you do with your subscribers, and like what I do with my community in the Balanced Firm, it's us, but it's also other members that actually help and encourage and inspire to actually take the plunge and do different things and offer different services and really have a go at redesigning what their practice looks like.
Yes, and we both know, you've just basically said it. It is lonely starting a firm on your own. I did that many years ago. I left my role in a public company. I thought I'd just waltzed into it. Well, I got some clients, but I found that my tax knowledge wasn't as good as I thought it should have been. And I developed associations. I very quickly got to know Andrew Geddes because I went to FMRC at the University of New England. And you need to make contact with people. And if people want to make contact with me or you, I know you'll be quite happy to talk to them and help them on this journey.
And I think it's a journey. Can I just say one more thing, Peter? It's the journey, but it's also like we're pretty close to what's actually happening on the ground and what's happening, some of the trends, which often people are doing things in practice because it's always been done that way, or it's from where they've come from. But we know what's happening with a lot of things, and we can talk about that. You talked about the minimum fee, like 59.6% of people with a minimum fee of $500. Now, we know that's in the tax return space. We know there's a lot of changes in that space. We know year on year, I talk to the ATO, the amount of people that are lodging via MyTax is increasing significantly every year. The people that lodge within the first few days on their own is increasing significantly every year. So we know that part of our client base, that people are very heavy with that tax stuff, that is going to go at some stage. I'm not saying compliance is dead, and I'm not,
No.
it's definitely not, but I think parts of our compliance are changing. And, if we invest a lot of time in that particular part of our practice from July through to September, then we don't get started on a normal compliance for business. We're behind the 8 ball to offer quarterly coaching with our tradies.
And they're the ones you're going to get a higher fee.
They're the ones we're going to get the higher fee from. So I just wanted to make that point. It's about being around people that are actually, they know what's happening in a lot of areas with either practice or with the government departments or with, things that you're doing with Andrew and, you're doing with a lot of us. We know what's happening and we can preempt and we can talk about it.
Yeah, you've got virtually no opportunity of growing that under $500 fee market, I think. So accountants need to make up their mind. If they're happy to stay in that, well, good luck. But I think they can move on and look at offering a wider range of services, make an arrangement to try to sell those clients to someone else, and basically do the tax returns only for business clients. I think that's quite okay.
I used to when I was in practice, I sold out in 2017, but my minimum fee for a tax return was $180 then. And a lot of people, I actually know there's a lot of people not even charging $180 now, like 5 years on. But I did that for a couple of reasons. I didn't want to compete with the ITP and the H&R block market. Like, I think we're quite distinct, and there's certainly got a market, and there's some really great people, and I know people that own franchises and do a very good job, but I wasn't going to compete with that, and I think there's a room for both of us to coexist. And I think that was one reason. So I didn't do, a minimum fee helped me that I wasn't just getting someone with 1 or 2 deductions, because they may as well do it themselves or go to ITP. I did a lot of stuff with rental properties, and I had quite a niche with rental properties. So there is some, and those people possibly are not going to go down the my tax route. Okay, so I think we can see what part of those client bases are going to stay. And then that might, because I know a lot of people say, well, hold on, some of those people actually do become business owners. So those people that I was talking about with the tax planning, 2 of those were employees all those years ago when I started working with them back in 95, 96. And then now that they've been business clients of mine for over 15 years. So I do get that actually happens, but it's like, okay, we do need to be quite strategic about who we're seeing in that space. So you can do what you've suggested. And I know people that basically outprice those individual returns. So their minimum fee is $330, $385, because they know that they're going to outprice in some respects. And they might lose those other people that may become business clients, but that's their model and they can make money out of that.
Yep.
We've got the proof of ID. I don't know whether you've been much into the proof of ID, but we've got to do that for new clients. And there's software now to do that. And I was talking to someone the other day, they were saying that they've actually looking at $14 per person to do the proof of ID. I'm not sure what product that is, but let's think about that. If we either have to do that manually, which I know many people will do because they won't want to pay $14, but the cost of actually doing that from an admin person or from us, actually paying $14 probably is the cheapest option.
Might be too.
But if you're only charging $140 for a tax return or $110 for a tax return, which is already hard to make money, then you've got to put those things on. I really think that, it does, like you said, think about this strategically. What is the direction? Use some of these numbers that we've talked about as the impetus or the inspiration to say, okay, well, let me just reset. Let me have a look at what I want my practice to look like, what I want my remuneration to look like. And I'd encourage everyone to jump out and see what you'd be worth on the open market. And we need to plug those figures into your own P&L.
Yes, well, I'm going to talk about some of those in a moment.
Yeah.
Because let's give a bit of a background here. In December, Accountants Daily ran an article which was headed something like 70% of accountants are looking around for other jobs. It was employed accountants they were referring to. And it was accountants employed in accountancy firms that they were relating the article to. So 70% were looking around. At the time, I interviewed Andrew Geddes in a podcast, and Andrew was quite critical of accountancy firm partners and said, you've got to take the younger accountants out with you. You've got to introduce them to the CEOs or managing directors, the real clients, so they can understand how negotiations are undertaken. You've got to break this nexus with tax return week. You've got to give them some variety, not get rid of tax, but give them some variety. Well, this week in the Financial Review, Edmund Tadros, who's the professional services editor at the Financial Review, has written an article that's relied on information being supplied to him by PwC. They've published their salary ranges, and it's because they've published their pay ranges for staff for the 23 financial year in an unprecedented move for the advisory sector that will establish benchmark salary ranges for the major consulting firms. They're disclosing this to help them with staff recruitment and retention of talent. So in this, they're talking about associates ranging from 59,800 to minimum to a maximum of 108,200. Now, a lot of this appears to be in the consulting industry, but this will flow over into the accounting industry, I'm sure. And financial advisory, senior associate, 74,400, 150,000. What we all need to realise, people who are employing accountants, is that a lot of people will read these articles, and this could generate some requests for pay reviews, and might actually cause a bit more disquiet. I got told by a few accountants recently that the article in December had caused some comments at the time, but they died down. Well, they might liven up again now as people read this article.
I think so. And I'm just trying to find something that I put up in my group called The Balanced Firm the other day. And I think it really, I can't find it at the minute, but it gave people a bit of an idea about, what other people are worth on the open market. So I think we need to be having these discussions about what people are worth. So a couple of things that I could say about that. I know that staff have actually, we've got people been interviewing for new employees, senior accountants or, intermediate accountants, and people have signed on the dotted line. They've gone and resigned, and they've been offered up to $20,000 extra to stay.
Okay.
So this is a lot. So people are not being able to get staff. So they've not been happy where they are. They've gone looking, but they've actually been offered $10,000 or $20,000 to stay, which that's a huge amount of money. And to be able to do that, maybe in the bigger firms, they've got more opportunity to have that sort of nest egg to pay that. But certainly in a small firm, that maybe you've been, working and helping those people and training them, we don't have that money. Like small businesses haven't got that just to throw at someone to retain. And what I did, I put in there, one was from the ATO, and I put this one up. So I would encourage everyone to look around what you're worth. On Seek, on, these sorts of things, we have surveys. Chartered accountants run one every year, and you can have a look and see, like that good, bad and the ugly. They actually have some data in there what they think a practice owner should achieve. But have a look. And the other thing is, we're in the box seat. We do tax returns for how many people? We know what different people are earning across different occupations. We know how easy or difficult some of these people's jobs are, the level of stress that they're under to get that particular amount of money, what they've got on the line or not got on the line. Like, we can compare all those things, but I don't think accountants actually sit down and think about how that compares with what they have. But I know that the ATO one, I'll send you the details so you can probably put in the show notes, but it was a call out for a graduate accountant position. And I think it was in the vicinity of 68 to 69,000, and it was 15.4% super. So this is someone coming out of uni, been to uni for 3 years full time, and that's what they're getting in a government job. So and we know that commercial is always different to, in practice, but this is what we're going to be up against. So we need to be looking at our models, because a model that you've got an average fee of $3,000, you've got 70, whatever you said that percentage was, 59.6% of clients under $500. It's very hard to retain and attract and pay those sort of money.
Yeah, and just looking at that when you said that in this PwC comparison, an associate in financial advisory minimum 55,700. So they're well below what you're talking about, the tax office offering.
Yeah.
For someone that, I assume that would be someone with a degree.
Here it is. I've got it. Here it is. It's under job description, a graduate accountant. And my son is 22 and he's just finishing uni at the end of the year. And I know what he is getting paid. No, that's not it. Graduate, I can't find it. I'll give it to you because it was really quite interesting. Here it is. Graduate accountant, 64 to 69, so $64,323 to $69,396 plus 15.4% super. That was recently.
That's another $3,000, isn't it?
And so I basically,
the
post that I said, what would you like your remuneration to be in 2023? And they've got the power to change it. And I've actually put a whole, giving people the ideas and the inspiration. I think that's, again, what we both can have in our communities to try to inspire. Because what's the use of us working for ourselves and not getting that money?
That's right. And I think what this is highlighting is that firm owners should be looking around and making sure that your client mix is going to generate the revenue you need. You might have a very capable accountant working for you, but you've got to have the right classification of clients that's going to generate the revenue first of all, but is also going to keep that person interested, because this was the real reason that Accountants Daily wrote their article back in December. They said, in effect, you're losing out on people because they're not happy with the mix of services, or maybe I've said that a little bit wrong. That was really what Andrew Geddes hit on when I interviewed him about it. He said, you've got to have this mixture of different sort of work. Sitting there doing, we all know, doing tax returns.
It's not enjoyable. It's not challenging work. It's not, that's what I say to you. When I had my practice, there was 2 rules that I had for engaging a new client. They had to be up to date with their tax returns, and they had to either be on accounting software or be willing to change to software. And, a lot of people might think that's pretty harsh, but I'm not the person sitting there going through that shoebox, adding up the receipt, going through the biscuit tins. My staff are, and I can tell you something, they would much prefer to be going into even a messy MYB or Xero file than actually going through that. So I think we've got to do that to be able to do that retention and teaching accounting to these people and our staff. And, it's much more enjoyable work, much enjoyable.
People aren't still using shoeboxes, are they?
There are plenty of people still using shoebox, Ziploc bags, biscuit tins. Absolutely. And I think as a profession, we want to also raise, help people to actually, go on to more, contemporary ways. And I know that a lot of them don't want to pay the $50 or $60 a month for a software, but again, it's an opportunity cost of not doing it. So I think there is a lot of those old things that we really should be getting rid of, and that can actually be, again, discussions that people hear from like-minded people and how they transition, how they have the conversations, because this is what's going to, and those people, I can also say, those are the jobs that cost us money. You're never going to make money out of those people. So by us not encouraging them to go software, it's actually costing us money, and they're probably the people in the less than $500 category. We're not helping anyone.
And we haven't got an analysis of when people pay their debts, but I suspect they might be in that 90-day column too. But,
so I think it's just a huge opportunity, Peter. I think the resetting, it's and just because we've done something in the past doesn't mean we have to still do it. And as practice owners, this is your practice, this is your life. And if you're not happy, and money is one thing, but also happiness, wanting to jump up, in the morning and go to the office, that's another thing. And I think, but money certainly does help you to do that and have more choices. But I know a lot of people say, money, it's not really important. I'm not doing it for the money. But if we're growing our business, we're good at what we're doing, and then we've got to actually pay people to come in and help us, they're not going to say, oh, money's not that important. Don't worry, pay me $20,000 less than I could go to a government job or go to PwC and do this work and have all these other conditions. We need to be realistic about this stuff, and the time is now.
Okay, well, I think we've given this subject today a fair run round, Amanda. So thank you very much for joining me. And
you're welcome.
As always, if anyone listening to this recording would like to have further discussions, Amanda, they can contact you on what number?
Yeah, well, if they just want to check out my website. So my consulting website is amandagascoigne.com, or the community that I have for small and solo accounting practice owners is thebalancefirm.com.
Okay, and if you want to talk to me, send me an email, please, peter@essbiztools.com.au, or go on and look at our website, www.essbiztools.com.au. Amanda, thank you very much for being with us today, and
thanks,
we'll
Peter.
talk
Great
again
discussion as always
in the future. Okay, thank you. Bye-bye.
Bye.